You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
It's live. How is everyone doing today? Howard here, bringing you the sharpest insights across stocks, options, commodities, crypto, and more. We do have a lot to unpack this morning. Let me turn this down a little bit. Our man BigBeat got stranded, although I think he's just enjoying a few more Guinness in the motherland there in Ireland for him. But he did have some plane issues, not back yet. Big news just hitting as we're coming on here is Tesla. Tesla's deliveries. Tesla's deliveries were expected to come in at 3. I want to get the total thing here. Hold on 1 second here. I'll pull the banner up here from our man, Mr. Bloomberg. There are the numbers coming across. Tesla's second quarter production, they made 410,000 vehicles. We're looking at 400,000, so they did beat it. And you can see this God candle taking off here, moving them from 300 to 323, challenging the first set of resistance right here at 325. So Tesla, wow, just a huge move to the upside. 7.5% up right now. So big move up by Tesla. That's probably going to change the numbers here when it comes to the Qs. And you can see the little spike here in the Qs. Excuse me. On that news, now down just 16 basis points. So we were coming in here. S&P's off their all-time highs. Seeing a little bit of a rotation. You know, we closed just below record highs yesterday. We slipped down about 11 basis points from those highs. Dow Jones yesterday did buck the trend. It was up nicely, almost a full percentage point yesterday. So Dow Jones, like we said, we're seeing a little bit of a cyclical move. Financials had a nice day. So did healthcare, AMGN, and others there. Banks we're going to talk a little bit more about coming up. And then, like I said, NASDAQ yesterday, a little bit of a laggard, down about 82 basis points as we saw some rotation out of the big tech names ahead of earnings season here. I will say today is, the last full day before July 4th. Tomorrow, just for those that don't know, stock market will close at noon and be closed on Friday. So we normally see volume really start to tick down after noon today. So we'll have to keep an eye there. Lighter volume can give you some really choppy action to keep an eye on. And again, we were looking for 386, but a nice little beat by Tesla has them moving up here. It'll be interesting to see if it can get, it's pulling back a little bit after that move. Not surprising it was a quick 8% move to the upside, but we'll see what we have when the cash market opens. We know how that can run. The rest of the Mag 7 not holding up quite as well. Apple's had a pretty good couple of day run here from the 200 level. We're going to dip back below it again here on Monday, and now we see it, it made a move as high as 210 yesterday. Looking to open right around 209.62. So Apple's starting to get a little bit of love again in the Mag 7. There, as we look, tick is still slightly negative here. It's been pretty volatile up and down without any real big one-way directional so far. Advanced decline is positive around 822. So that can go even back to negative on the open here. So pretty, muted start so far. DXY, we're going to have Mr. Flanagan in a little bit, getting a little bit of a bounce back here today. Man, a new low of 96.37, 96.37 in yesterday's trading. It is getting a little bit of love here today, so we'll see what's happening. Senate did pass, their part of the big bill there, and it is back to the House. We'll see what that has to play out, or how that plays out. So again, we've already talked about Tesla, some other stocks moving here, or that were moving in the pre-market, JP Morgan, and not just JP Morgan, but most of the other banks. In fact, I have the banks here. We're moving nicely to the upside here, on the announcement that they are going to start to do some market buybacks. So they had a strong post-stress test capital actions. And what we see is JP Morgan is moved their dividend to $1.50, and they're going to do a $50 billion buyback of their stock. Bank of America raised their dividend to 28 cents. And JP Morgan up about 35, almost at opening up just below its all-time high. Bank of America, same thing, looking to open up basically right at its all-time high. Wells Fargo announced a 45-cent dividend themselves, again, after, you can see up almost 2% over the last couple of days. And those here on Quasar Markets know that I purchased a week ago Goldman Sachs. I did mention yesterday I took profit at 710 there. So I do have about a half a position left. I'm going to let that run a little bit here on Goldman Sachs, but I bought that in that 625, 630 level here on this dip back on the 23rd. Took half profit and now looking to take maybe the rest today. So the stress test this year modeled a global recession. And again, the stress test is what gets done between the banks, the FDIC, and the OCC, where they sort of go in, look at the books, say worst case scenarios, best case scenarios. What does your holdings look like as a bank? Is it safe? All of them passed the stress test very nicely. The model is showing, though, 10% unemployment and about a 33% housing price drop over the next, year or so. So they are definitely showing, that the stress in the markets overall, or beneath the markets in general, and that 33% housing drop would be interesting. They easily passed the stress test. Like I said, the capital buffers, they're declining year over year, showing a healthier balance sheet. So banks, again, moving up nicely. On the other side of that, not moving up nicely is CNC. Centene down about 27% here today. I do want to switch back here. Give me 1 second to get back into my. Oops. Down about now 32% here this morning. That was after a plus day yesterday. And you can see it's set to open all the way down here at 38.49. This is after they pulled their fiscal year 25 guidance. They issued issues include lower enrollments than expected and sicker than modeled customers in the ACA, or the affordable healthcare markets. Estimated a $1.8 billion earnings hit, guidance withdrawn, and it has most of the sector, or it had most of the sector. UNH was moving down on this news, still is down about 2.57. Who else did I see was down? Moline, I believe, was down. Molina Healthcare, down almost 12.5%. and Elevance was the other one that I noticed that was down. So, while we've seen the cyclical move and a lot of these healthcare names have been getting a lot of love, you can see Elevance about to, open up, giving back the entire 2 weeks of gains that it's shown before that. Same thing, UNH we know has been under so much of trouble here and not getting hit quite as hard there. So, but the healthcare definitely still showing some other, some weakness without a doubt. I did mention Apple's move up. We'll also say did see an upgrade there, came from Jeffries, moved them from underperform to hold, and moved their price target up there. They noted that quarter thirds earnings could stabilize the stock in the near term. Again, this is down 17% year to date and definitely underperforming most of the Mag 7 there. So a couple of other smaller movers or things going on in the market that I did see. You have Verint up about 10% here this morning on news of maybe being acquired by Thomas Bravo. So a little bit of an acquisition maybe move here as them moving up. This is after a pretty down day by them yesterday. Greenberg. Whoops, if I can spell. Was one up nicely, up almost 15% today, trying to challenge its 200-day MA. This is, a heavy industrials company. They had a nice beat and raised their quarter 30 earnings. So nice move up. Let's see what happens at this 200-day MA. This is one that's interesting this is a pivot point. This is a sort of make it break it. If it gets rejected here, you can definitely play a short back down, even just for a half back return towards this 49.45, and any kind of breakout above that 200-day MA. Look for a run all the way up towards 60, low 60. So definitely room to move here when it comes to that. Other news here, Figma getting ready to do their IPO. So very similar to what Adobe does. And I think Adobe was down almost 1.5% earlier this morning, almost 2% now, as Figma gets ready to do their IPO. So it looks like people thinking, this is sort of that creator mentality. This is, Figma is the newer school of that. Seeing that Microsoft to lay off as many as 9,000 employees in the latest round of cuts per the Seattle Times. And next, that leads me into ADP's big miss, 33K jobs. Private sector lost 33,000 jobs in June versus a gain expected of 100K jobs. So again, big miss when it comes to the jobs report. They also revised May down lower from 37,000 added jobs down to 29. We see that the weakness is driven by service sectors, professional and business services down 56K, and health and education down 52K. Smaller businesses are what are getting hit harder, losing about 30,000 of those jobs. So this, while we just saw Microsoft announce theirs, this was definitely there. Pay gains also slowed. Job switchers are down about 6.8, and job stayers are at about 4.4%. So, what will this do for the Fed? I didn't look at Fed Watch yet this morning. Let's pull that up quickly. And for those that don't know, Fed Watch is the CMA's sort of predictive market on what's going to happen at the next FOMC meeting. So in July, we are seeing about a 75% skew towards no change, about a 25% skew that we see a rate cut here of a quarter percentage point. Not really that changed. That's about the same as we were a month ago and a week ago. So it is a change versus yesterday of about 5%, but not really a big change versus what we had been seeing there. So doesn't look like, even whatever any of the news that we're getting has us, poised for that. And we can see that the 10-year has now picked up over the last 2 days. It had gotten down below 4.2, now back almost at 4.3. And the 30-year that had dipped down right about 4.73, they've gained about a full percentage point or full point here. So, that's telling you what, is going to happen or what not going to happen. So they are expecting Powell to stick where he is. I did have to laugh that Powell is sort of, we're hearing all the talk that, either he's going to step down of his own accord or the president is going to try to force his hand. Also hearing talk that the president would like to get Secretary Treasury Bessent in there. To me, that's not a positive move. We talked about that with Michael Litt. You don't want a Trump yes man in there. I think it would be, while maybe good for the short-term recovery, definitely bad for the longer-term look there. And, he was at the ECB forum yesterday, and he just said that tariffs have added to inflation forecasts, and we would have cut rates if not for the tariffs. So, again, he definitely is not too worried about what, he says or what is going on right now. So it is funny, interesting to watch, but not interesting when it affects the markets the way it is. And again, what we did see out of the ADP is sort of that shockwave that we are seeing small businesses really shedding the jobs. So not surprising there. I would look for the Russell 2000 to get hit here this morning on open. It was down a little bit yesterday. It had been a high flyer, so be interesting to see how that, what happens to that as it hits. VIX is up around 1727. Again, if you were listening to me here, I started buying some longer dated calls when it was at low 16s. So I'm happy with that. And we'll let those sit. This isn't the level I'm looking. I'm looking for more of a pump back up to that 20 level before I would get out of those. I think the other thing that is definitely very much weighing on the markets and going to continue to weigh on the markets over the next, 5-10 days is we're getting closer to July 9th, right? We're getting closer to July 9th, and so far we haven't seen really a lot of movement on these trade deals. We've heard a lot of hype. We've seen the trade deal with the UK. We've had talks with Japan. We've had talks with India. We've had talks with China, but we're really not seeing a lot of positive movement. And I do think that is going to be what weighs on the markets here maybe today and going through the weekend. So, we need to see these trade deals actually play themselves out. The president did say that they felt that Japan was spoiled and that they are unlikely to reach a trade deal. We know, I think it was their 8th different trade delegation that came in, or the 8th time the trade delegation came to the U.S. since, Liberation Day. And the president said that tariffs could rise to 35% after July 9th if no agreement. And obviously the auto sector is the key risk here. And, again, it's one of those ones, though, Japan has a 25% car import on us. So it makes it a little bit difficult. What he's saying makes sense. On the other side of that, again, the president does say a deal with India is close. This would be fantastic. It's one that we've talked about here, especially Steve Flanagan's talked about it, I know. along with BigBeat, the president's connection to Prime Minister Modi, and how that maybe could play out. If India lowers some barriers for U.S. firms, they could get some tariff relief, it sounds like, and that could be pretty, decent overall. But with that being said, Asian markets were showing a little bit of wobble, and the Nikkei was falling on this news down about 60 basis points overnight. And those, what was sort of interesting is, I thought we'd see a more pronounced move to the downside, maybe by Toyota. If I could spell again. And really a muted, almost flat move there by Honda. Honda is actually up on the news, although Honda does make more cars here than the others do, so maybe that is why. So a little bit of a mixed bag. It hasn't really seemed to have hit too far on there. We are about 6 minutes from the open. Tick is slightly negative. Advanced decline has moved up a little bit, 945. So a little bit of a move to the upside here that we're seeing. Let's talk a little bit about commodities. And I want to talk a little bit about Steve's favorite, silver. Up 10% over the last month here, you can see. Up year-to-date, 25%. It's had a great move, but one of the things I'll be interested in is I did notice that one of the key drivers that we've seen on silver has been solar panel manufacturers. And what is going to happen as the U.S. rolls back some of these initiatives and buybacks and tax breaks for them? I'm interested as what it does there. Historically, July has been a really good month for silver with almost 5% returns over the last 10 years. So it's going to be interesting. Silver is one that, BigBeat's been big on. It might be time for that silver gold ratio to come back out and maybe silver to make that next move up that Steve had been talking about. As we look at oil here, up a little bit over the last couple of days after, taking the huge drop after the Iran bombing. We see the WTI sitting here right around 65. Brent right around 67. So, again, sort of a muted response to everything out there. We're not seeing that flight into crude or that flight into gold right now. So while, the economies maybe don't look that great, really not seeing, although I guess gold really sort of has from that lows at 32.50. It's pulled $100 to the upside. So maybe a little bit there in that. Bitcoin sitting right around 107,567 right now, rejected again at 108 more this morning. Looks like 105 is the key support area that I'm showing on my charts in general. And, we're really range bound until we can see a clear break. And we don't, again, seem to have all of the setups to make that clean break. While the King dollar has taken a break and, sitting down in 96, low 97s should be good for us. A lot of the tech money has been moving into the Qs and into tech and not so much into crypto. And we're really not seeing alt season even start to kick off yet. I do think we're going to need to see a big divergence where Ethereum gains a lot versus Bitcoin to see that. And Ethereum's really getting weighted down at the 200-day moving average. Hasn't really been able to break to the upside above that here, going all the way back into mid-June. So not seeing a ton of great moves here. My best conviction move is on a move back to 105 on Bitcoin today. We do see some weakness on the cash open. maybe a swing long from that 105 area gets a little bit interesting. We are getting close to the open here. Let's take a quick look at what, as I said, some of the bigger losers are in the health services area, led by CNC, Centene, Moline, Elevance, all moving to the downside. Do see a few other sectors getting hit. Technology a little bit here. CARG, BZ, Credo, all getting hit a little bit here. On the upside, interesting. We see Albemarle, the number one mover to the upside, up almost 5%. One of Steve's favorite lithium providers, copper providers. Albemarle, nice move up here today. Just broke 65, so up about 3.66% here. Nice move to the upside. Seeing continued move to the, oops, hit the wrong button there. Continuing to see move up by Melco here. So as we talked about yesterday, the gaming stocks, nice little move up here on that. We're about 1 minute from the open here. I will mention I did buy Coinbase yesterday on the dip, Robinhood yesterday on the dip, Palantir yesterday on the dip. So few new positions there that I am in. We'll see how those play out here. They are all, actually, I think Palantir is slated to open up down for me. The others were slated to open up. And we are open. It actually looks like all of them opening up in the green for me here so far. Robinhood just went slightly negative, so. Nice move up here by Mara. Again, those that know, we've been in a 15-19 Mara covered call in my room there. It's getting hit a little bit here on the open. Nice move to the upside here. Looking forward to get to about 1685 here as the key spot. We'll get out of our position on any move up to that 1685. Same thing, we're in a covered call on Clean Spark that I've been talking about here. Up nicely about 3.61% here. And nice move to the upside. And there goes Palantir. Nice move to the upside here. So we are definitely looking good on those positions. In fact, I might need to. Good there. And looking good there. So trades are looking pretty good so far. Let's see what Qs are doing on the open here. 546.53. So first move is a little bit of a move to the upside, but a pretty muted start here. There, the one you want to watch is Tesla. What do we get? And as we said, it's pulled back. So we rejected pretty firmly at that 325 and now pulling back pretty significantly here back to that 311 level here. Still below that 200-day MA. So it tried to get through the 200-day MA, unable to hold above it. Seeing Canadian manufacturing PMI come in a little light here today, 45.6 versus last month 46.1. So not faring much better in Canada versus what we see here in the US. Do see NVIDIA with a move to the upside here, now up about 40 basis points. Apple up 73. So Apple really getting the love. A nice move from that 200, 198 level actually. Back up. Microsoft still battling to get back above 500 so far. Google does look to be using that 200-day MA currently as support, so it's good to see that. Finally broke through it again here last week and now moving back up. Amazon trying to get above 220 again. Meta moved up a little bit here into the green. And again, Tesla seeing a little bit of a buy and start to pick up. If we look at the different sectors of the S&P, we see energy moving to the upside right now. We see XLB, which is the material sector, moving to the upside, and XLY, which is the consumer discretionary, moving to the upside. Leading the downside right now, utilities down about 51 basis points, and healthcare down 57 basis points. Again, that's led by Centene, and the knockoff effect it's having from theirs. Pretty muted move. Not really much happened to Bitcoin on the open here, or gold. So pretty muted open here, to be honest with you, so far. We do see advanced declines negative, like I said, when it was only up at 700-800. You can see this is exactly what can happen on the open. It can move negative, but not anything too bad to worry about. Negative 247. VIX is actually still pretty stable here. DXY back above 97. Like I said, we will have Mr. Flanagan coming on pretty soon here to talk about it. I do have to send out a stealth signal here on something to my group. Give me 1 second here to check something, everybody. I apologize. I'm solo trying to do everything at once. I do need to manage the trades that I am in already. Perfect. Boom. So I did get out of half of my calls there. Now I got to do Mara. Perfect. Nice. Okay. So I am locking in those profits there. Okay, everybody. Sorry, just trying to do a few things at once. Give me 1 second. I got to enter this. Sorry, everybody. Just got to put in. Sorry, everybody. Just needed to send that out to my trading room. Couple of big wins there. Nice. And what I am noticing is all of the Bitcoin mining companies are starting to take off, especially the small ones. So keep your eye on a CIFR today. Keep your eye. Bitdeer was another one that just made a jump that could be in there. Hive is another one. And that could be one to keep an eye on. That's a lagger. But big moves up by the Bitcoin mining companies. Amazing that Bitcoin's not participating in this really, though. That's an interesting development. HUT up 14% now. HUT looks like you could look to short it maybe in this 2180 area. Definitely think a running failure at 22 gives you shot for a short here on HUT. Do you think that's the case? In fact, I like it. I like it for a short here. It's too fast, too far. Too fast, too far there. Wow, nice moves by Palantir, Coin, Hood, all of the ones that I bought yesterday looking really nice so far. Heck of a start to the day. I might have to take some profits in some of these now. 5% on Hood. Coinbase only up 2. Palantir like 2. Not enough to take profits yet, but they're moving up nicely. So far, it looks like Steam's starting to run out a little bit here. But man, what a move by the Bitcoin mining companies. And this is as advanced decline, and tech sector has gone positive, not led by Tesla. That's really led by these crypto companies. Look at this move up by everything. MicroStrategy 2.5%, Coinbase almost 2% on the day, Hood 2.5%, Mara 4.65%. Look at something here, see if I can find. See if we do that. That could be interesting. I do see our man, Mr. Currency, who's going to come explain to me if King Dollar is ever coming back. Mr. Finnegan, what's going on, sir?
Well, I don't know. I still like the dollar, but as I told you, I'm sitting patiently waiting for the market pricing to tell me when to catch. It looks like we're in a bounce right now. Dixie is now at 97.08. Last week's close, 97.25. Coming up on it. You know, this is a move that's characterized by sell the rally. The negatives on the dollar are firmly entrenched. And it comes around tariffs. I mean, it's getting time, July 9th, around the corner. It's time for the rubber to hit the road. All the central banks are talking uncertainty due to tariffs. Our Fed, inflation's coming back due to tariffs. Eurozone, weakening numbers, moderately growth, but weakening. Japan, moderate, weakening numbers. It's quite clear that this market would need to get the tariff issue done and move on. And I think what's going to happen as we get closer and closer to this date, more and more of these elected officials, remember, if the economy crumbles, you're not getting reelected.
And yeah. I mean, I think that falls on everybody, though, right now, across the board with it. And I'm more worried if you've been listening to me this morning. We're getting close to July 9th.
Yep.
And we've got a couple of days of holidays. Now, I know they're not holidays around the world, but, let's face it slows down a little bit here in the beginning of July. And we're not seeing that real, nothing that matters so far, right?
That's correct. And if you look out, you're absolutely right. The PMIs that have been coming out, manufacturing indexes, have been, lukewarm, a little bit higher here, a little bit lower there. And I as you know, I'm a macro trader. I watch the macro, but to our viewers, macro sets a theme. And that's why I watch the macro landscape. Today, though, the market is fueled by microstructure reflexes. We've referred to it here as tweets. So you've got to have a good understanding of the macro environment that you're trading in, but you must be highly reactive to the microstructure side of this marketplace. So you're right. July 9th's coming up. ADP was weaker.
Weaker? You're just going to blow past that with a weaker?
That's all I'm going to say, because these numbers are so, week to week, month to month. You've got to take a larger look at it. Tomorrow's payrolls, 110 is expected on job creations. I'm watching the unemployment rate. And I'm going to start specifying the unemployment rate is at 4.2. Do we see a jump back? If that number is really weak, reflective of this ADP number, might we see unemployment jump up? I mean, look at the unemployment in Italy today. It went 6.1 to 6.5.
Yeah, and this is, like they said, this was all led, 30,000 of these 33,000 job cuts were small businesses. But meanwhile, I saw today that Microsoft's cutting 9,000 jobs in Seattle. So, is it a trickle up effect that's going to start to hit? In other words, the people who couldn't hold on didn't, employers, when I say that. And now, does that trickle up to these bigger companies, which exposes a bigger issue?
And these are the things we're watching for in the micro day-to-day environment. But we've got Powell out there yesterday saying the Fed has delayed cutting interest rates to better understand the impact of tariffs. Okay, well, he's got to move away from the theme, and he's got to start looking at, instead of his macro view of tariffs equals inflation, he's got to start looking at the micro, which is day-to-day, what it affects the people. And that's the thing that is the rubber hitting the road.
Yeah, and him coming out yesterday and saying, hey, if the president didn't have tariffs, we would have already cut. We don't need that.
That's,
we don't need it. We just don't need
it. It's a ridiculous comment because it highlights the flimsiness of his argument. He's using the academics that dominate the Federal Reserve Governing Board. He's using the academics approach that tariffs equals inflation, therefore we have to be uncertain. He's ignoring what's really going on, and he covers himself by saying, well, if we didn't have tariffs, we would have lowered rates. So, come on.
Yeah.
The global central banks...
Pretty disappointing myself.
The global central banks face this dilemma right now. What if inflation stabilizes at 2.5% and not 2%? What are they going to do? They've all fixated themselves on a 2% number, which, quite honestly, if it's anything like their models predicting, then I would have to say, where the heck did they come up with 2%? What's wrong with 2.5? And if it's 2.5, then aren't we already in a very restrictive monetary stance here?
Yeah.
So, all these things, back to the dollar, all these things come into play here with the dollar. Right now, the world has a very low opinion and confidence level, whether it's the political situation in the U.S. or whether it's the Federal Reserve. Everybody's confidence levels are very low. Hence, any investment in the United States immediately has a very strong hedging position put on. If you buy $10 in the U.S. stock market from abroad, then you are immediately selling $4 in the currency market as an active hedge, and may even go up to 60 cents. So I think the hedging is very outweighed right now. And when we look at the technicals, stochastics, I always love stochastics because it is a momentum indicator. And when we look at these, we see it across the board. The euro dollar roughly at 117.65, still far above last week's close of 117.16, but the stochastics are turning sharply lower. Sterling, Wow. Here's one. If you want to look at a leading edge here, 135.95. Last week's close was 137.16. No, I think I have that wrong. But the stochastics have turned sharply lower based on a lot of the talk.
Yeah, their weekly close was 137.13. You're right.
You're right. Okay, so support is at 135.90. We're right on it. Sterling, there's suddenly a lot of questions. Some of the members who, remember, they were 6-3 in their last to hold rates. 3 people wanted to cut, and that number is now growing, and they're getting very vocal. So now people are talking about
the big news there. I don't know if you saw AstraZeneca is talking about leaving the London Stock Exchange.
Yep, there you go. And you're talking maybe a 0.5% rate cut. So central banks now are going to look, a little bit flimsy, and their, argument is not holding water here. And again, I point out what's wrong with 2.5% inflation. If 2% was your goal, and you're stabilizing, in this area, then why can't we start focusing on growth?
Right.
And lower rates would help growth. Because there's another side to tariffs that the central banks say tariffs equals inflation. What about tariffs and growth?
Yeah, I mean, it's, the banks passed their stress tests with flying colors yesterday. But one of the takeaways from that is they do their economic outlook. They have housing prices dropping 33% in the next year.
With 30-year mortgages in excess of 7%, sometimes closing in, depending where you're going, at 8%, there's no doubt that's going to stymie any market.
That, the insurance rates that keep on getting hiked for so many different areas. I mean, I know you're down in FLA now, so I'm sure you're seeing that where the insurance rates are just, they don't lose. I mean, Michael Litt did a great job of explaining why that is such a good sector to be looking at, and why it's one of the few sectors where he feels that its growth rates are not going to get hurt by what's going on, because insurance, they just pass it along. It's just a number to them, just a number.
It's just a number, and it only goes one way, and that's up.
Yeah. So that, those things are, that's where, what we've talked about and what we've seen is that Americans are holding more money in the bank than they normally do in times like now. So that's a positive. But all of the other things that are pointing at us are so negative that I wonder, where is that breaking point? Because we haven't seen the capitulation like we did a month or two ago.
I think we've seen a capitulation. I just think that now everybody's anesthetized to which way do I go,
Yeah.
Seriously, I focus on the positives, because when we're in such a negative, saturated world that we're in right now, in the macro environment, I begin to look, where are the signals? Because while I'm not jumping into this marketplace and trying to, step in front of the freight train and say, stop. I am saying that once some of these negative, it's time for positives to move to the forefront. And that move is the move I'm looking to pick up on, because that's going to be a huge move. So I watch the dollar. I watch it very carefully. The yen is a big focus of mine at 144.05. Last week's close was 144.62. But the situation in Japan is not very good. I don't see it as a very good situation. And now with the threat, Japan is remember, Japan for 25 years. Japan is still at a 0.5% interest rate in a world where everybody raised rates. When everybody raised rates, they were still negative interest rates and still doing quantitative easing. So Japan runs to a different beat, and they're turning and saying to the U.S., if we make these adjustments, it could hurt our domestic economy, and that's not happening. And now, again, rubber hitting the road. Now they're faced with, you're going to have 35% tariffs, sure to cripple the Japanese economy, which is just beginning to come out of a 25-year deflation. Now they're faced with a very critical decision.
It's interesting because, you bring it up, and one of the things that I've noticed is the market doesn't believe those because, it's the stocks aren't moving. It's, Toyota's down almost nothing. Honda's up today on this news. So it's really, there's some dichotomy here that's got me confused and worried, or, like you said, is it just a temporary blip and they've got to come back to the board, and that's what investors are saying?
The money that would be what I've always referred to as in the know understands that a deal will get done. In fact, that probably goes right across many of the nations. The only one that's going to be a problem is the euro. Eurozone is going, there's just too many member nations that have differing opinions on any agreement here. And that could be a crippling blow down the road. But for right now, that's not one that's on my horizon.
Right.
Watch India carefully. I think India gets it. I think India is, quickly moving to a place outside of China where the U.S. could deal with, and India would receive, a lot of positives from that relationship. It's just that they have such a protective economy. And after all, there is, it's this $1.3 billion, $1.4 billion with a middle class that's, 350 million to 400 million people. So they do have to protect their economy and inflation within. But I think India is a strong beneficiary, and I think that that's my big positive that I see for the turn. That's what I'm watching carefully.
Okay. Anything else before the July 4th holiday that's coming up, or was it just thinking watching the low volume here?
Well, I'm watching the low volume, but tomorrow's numbers and then Friday, when you get a blank where the U.S. markets are closed, you have to be very careful that, there's a big potential for a big setup.
Right.
Are markets manipulated? Of course not. But when you make that type of comment, you have to say, well, maybe a tiny bit.
It goosed maybe a little bit. How's that?
And
someone might goose them a little bit one way or the other.
I love it. And so let's use that term. Friday represents a day where markets can be goosed. Then you have Saturday off, and you're not going to look at the markets until Sunday. So there's a long stretch in holding a position from today, tomorrow's close, abbreviated close, until Monday.
Yeah, and again, from noon tomorrow all the way till Monday. So I'm with you there. Mr. Flanagan, have a fantastic holiday weekend, and enjoy your family and some fireworks and some fun.
We'll see you again Monday.
See you then, sir.